Good morning, everyone. How's everybody doing this morning? Hey, Moran. How are you? Well, I guess it's afternoon for us, but I always say good morning. Jerry, how are you? Happy New Year. Hey, Peter, Happy New Year. Morning to the folks who are joining us on YouTube. Happy New Year. Good to see you all. Hey, Badir, how you doing? I was just talking about you earlier. That's okay. That's okay. You need to take some time off. It's always good. It's always healthy to take a little time off when you're trading. It's not going to hurt. Helps you recharge a little bit. No, I was saying that you were one of the brainier members of our group, and that you're developing this software that you and I are working on. And well, actually, you did all the work. That puts retail traders in a size trader's perspective. Shows you how to compete. Shows you how size moves markets. Things like that. This way, it'll help you visualize. And Badir's done some amazing work. He's a really smart dude. So he's got all the zeros and ones down. I'm the street smart. He's the brain smarts. So, hey, Jam, what's up? Have you slept at all, Jam, or you just working that natural high off New Year's Eve? Hope you got some sleep. Okay, good, good. Don't trade when you haven't slept. Attila, good morning. Welcome to the room. Hey, Kevin, how's your vacation? Speaking of which, aren't you supposed to be on the beach? The gap was filled. I've got to, Slicey man, I didn't delete that. Gap was filled. It's very interesting though about the gap, right? So we had that gap. It filled on New Year's Eve. But the amazing thing is, most of the volume, we haven't been down to get into that gap yet. So, oh, sorry, let me just start again. All right, a little distracted here. So, overnight inventory is 100% long. What are the chances you're doing these live sessions for the next 20 years? Well, I just lost 28 pounds at Christmas time. Heart's okay. Uh, you know, 20 years? Sure. Hopefully you won't need 20 years to get profitable, but, you know, I'll be doing them as long as people want me to do them. It's an interesting question. That's the nice thing about trading. Meyer Blinder traded into his 90s. The guy from, what is that hedge fund? Not that mutual fund. Berman. Berman traded into his 90s from Neuberger Berman. All those guys, they traded into their 90s. Uh, what diet am I on? I do the fasting thing and just lots of exercise, no carbs. I was bad last year. Yeah, Dalton's what, 86? He's still banging away, right? You know. Yeah. So, overnight inventory is 100% long. You guys will see that as a gap up from the close of the previous day, right? And that means that there were bids in the opening auction before the market opened last night at 6 p.m. And so the market's working very nicely. The liquidating volume is now being sold higher. Now, somebody was asking earlier this morning, what are the benefits of market profile? Well, market profile is an insanely useful tool, but there are about, there are about four major things for market profile that you will actually be able to use to make money. The rest of it is beautiful as a thought experiment and stuff like that, but the practical stuff, and we want to make, this is my goal this year, my New Year's resolution is to get you guys profitable and keep you from losing money. And the way we do that is just some good old common horse sense, like they say in the prairies where I grew up. Just common sense, practical. Here's where market profile is really helpful. It shows you where your inventory is priced, and then you're in distribution, and then you're in discount. So just like a store, say we bought 10,000 TVs from China. I've been watching a lot of China videos, right? So we bought 10,000 TVs from China and they're priced under 68, 64. Well, before the holiday, we saw buyers, right? And the market moved higher, right? Because we could sell them at a profit. Then after a couple of days, we kind of ran out of buying. This didn't happen, so we had to put it on sale. Now, we've put it on sale. We're nowhere near that cost basis, right? You can see the blue stuff is where 70% of your inventory is priced. That is what market profile people call the value area. Unfortunately, they don't tell you the practical aspects of this value area, which is really cool if you think about it. Because if you're a trader, you need to know where you got to price your stuff, right? You're buying and selling and buying and selling. And you need to know where to price and put that, keep your expectations realistic, all that stuff. So if you can see this is distribution, and then you can see that the cost basis, the bulk of the inventory from New Year's Eve is being sold higher for profit, right? So the market's working really nicely, right? After a liquidation in the overnight, you should see, right, the market move higher, right? Because that is just what we call a liquidation break. Now, if we had real selling, we would have taken out the New Year's Eve low and we would have come back down into this cost basis here. Hang on. See? There's where the inventory was priced after this liquidation, and then right back up, marked it up for the end of the year, put on sale, back up, right? Yeah, well, Mr. Simpson, actually you're wrong. They didn't dump it. Traders dumped it, the market makers bought it, and they got rid of it here. So this whole dirty market making thing, you got to stop. You got to cut out, excuse my language, I'm going to swear. You got to cut that bullshit out of your narrative because it's not helping you make money. Right? Market makers are not dirty. It's not 1986, right? It's not 1990 where you have John Fierro doing, shorting markets and stuff like that. Right? So if you guys want to actually make money, get rid of these bullshit narratives about dirty market makers, right? So when you have a sell-off, the market maker's job is to absorb that inventory, okay? They take that inventory in and try and get rid of it the next day. Because you don't know sweet F all about the business, you think this is dirty, where it's just business, right? So maybe tone back the rhetoric a little bit, try and learn something, right? Just saying, right? And for folks who are just joining us on YouTube, I don't usually talk like that. This guy's on my YouTube every day. Sometimes he takes his meds, sometimes he doesn't. So sometimes he says some crazy shit. What liquidation? Liquidation is, say, Attila, if you were trapped long, right? If you were long, say, 500 contracts in this area above 43 and the market broke 43, you would start to liquidate. Does that make sense? Now, there's different kinds of liquidation. There's liquidation, which is an inventory correction, and then there's liquidation, which is stronger selling. How do you tell the difference? You use the levels. Okay? So that's something, and you'll see that when you're with us, right? If you join us every day, you'll see that we trade these liquidation breaks. They're great. They give us great trade strategies, right? So understanding where your inventory is priced, and Friday, or not Friday, New Year's Eve was market maker month end. So they had a great chance to get some supply in that gap. That was a short position. So there is still a short position, and I'm going to get to it here in just a second. You can see that the market, there's the gap fill, which we filled on Friday. The point of control, which means 70% of Friday's inventory was priced here. Then we kind of gapped open on Sunday night, right? We gapped open on Sunday night, and we took this, and we've been selling it for profit during Globex. So the market makers cleaned out their books, right? Because they have to provide liquidity, right? So that's something to be aware of. And obviously, there's still some people who are trapped short because we have in our profile, so I talked about where the cost basis is, right? Where stuff is priced, right? So now the second thing about market profile, practical stuff, is showing you where the shorts are trapped. So the shorts are trapped here and here and here. Because when the market takes out these highs, the people who aren't using a hard stop will rush to cover. And when you take out that high, same thing, that high. So when the market retraces, these are the levels that you'll be looking for bids. How do you use that in a practical manner? Well, say you're short at 69.26 and the market trades down to 69.16, you will be looking for responsive buying here. Here, I left the single prints even though they got filled because I wanted to show you folks, we had single prints here, we filled them in this F period. Now F, if you're not familiar with market profile, all we do is we give a half-hour candlestick bar a name, right? So what we do is A period is 9:30 to 10 and so on. So we can say, hey, in J period, we corrected inventory down, but we didn't take out the F low, and K period didn't take the J low, and L period didn't take the K low. Now, what does that mean practically, right? How can you use that information in a practical way? Because none of the stuff that you guys talk about in trading you can actually use, right? So you got to put a trade strategy around that. So if you're short and the market comes down, say you were short in L period and it came down and L couldn't take out the J and K lows, you know that the bid, which was here at 69.20, moved up and then moved up again. Over an hour, the bid has moved higher, right? When the bid moves higher, you know there's going to be responsive buying. So if you were short, say 27, 28, came down here, you know this is a place where you're going to have to cover, right? And this will be an area that we're going to be looking at when the market opens because there's a 70% chance that we will get a move down to correct that inventory, right? So right there, you see that M low where the red line says stop. See how W came down to it? Stopped. The X period that we're currently in has still not taken the W low. So that's the first area of interest for a short seller, right? If we don't break that, it's going to rotate back up on the open. If it breaks that, then you're looking for a cover somewhere around 69.22, right? So that's the second most important thing, right? So there's the value area or cost basis. Where's your inventory priced? Secondly, where are the shorts trapped, right? And then thirdly, when you have things like poor highs and poor lows, well, let's see if we can find a poor high. Where was our last poor high? Oh, we haven't had one for a while. Poor highs and poor lows just mean that, sellers are trapped or buyers are trapped. I'll find an example, right? So those are the basic four takeaways, and then or three takeaways, and the fourth is where are the stops. So the stops are going to be here, which means anyone who's long on a larger time frame over 69.26 is going to have their stop here at 25.25. If that breaks, the people who are long above it will likely start to sell out. What they call weaker hands. Okay? So everything we do is practical, right? We have to be practical because you don't want to spend all your life analyzing a market and then going and executing it and your execution is crap, right? So the analysis should be where's the buying, where's the selling, right? And then we can tailor an execution plan. Now, I haven't even traded today, so I'm going to open up my trading software. Where is it? Where is it? See how we're coming down? And you'll see on a candle chart, that is explained by the bids before VWAP, right? See how the market comes down? It couldn't transact at VWAP and the offers lift. When the offers lift, that is your indication to cover. Okay? Sure you'd like to cover lower? Hey Dan, how you doing? Happy New Year. Right? We all like to cover lower, but like I say, you got to buy them back where you can, not where you want. So there, we had a break, right? We broke that W low. We broke the M low. Let's see how much candy falls out now, because anyone who's long over 26 is not happy right now. The thing is, not everybody sells at the same time. So if you're short and we accept under VWAP, you're looking for buy orders in that 20, where are we here? You're looking for buy orders just in that 22 area. So like I said earlier in our morning session, market profile is like a map of the city. So this is a map of the city. And then when you want to do business, you zone in to the neighborhood of that city, and that's where the 1-minute candle chart helps you with your execution. Right? So say if you were short at 28 or 29, right? The candles clearly show you that there are sellers at 28, right? So even if you were shorting late and you're shorting here, let's go take a look. Right? So you could clearly see where the sellers are. Right? They're at the top of these candles. They were selling there, they were selling there, there. Where they sold before, they will sell again. Now, how do I know this? Because I've sold more stock than all of you put together. I've sold billions of shares of stock into US markets over the last 30 years. I'm a distributor, right? I'm a liquidator. So the top of the candle is where the sellers start to compete. If you're short and the candles have lower highs, that's a good thing. That's for you trend line people, right? That's what creates a trend line, right? A trend line is created by the offer moving up or the offer moving down. Very simple. Nobody ever explains it like that because they don't understand the business properly, right? If you understand the mechanics of the business, you're way better off. Because then if you understand where your inventory is, where it's priced, then you're not going to be buying the highs and shorting the lows. Does that make sense? You guys follow? Cool. Hey, Arkroy, how you doing? Okay, so we found some bids here. We did a look below and fail of VWAP. The overnight point of control is here. So we're still distributing. There's still some buyers, right? So where they were trapped short, see they came in and bought, which is interesting because the J, K, and L lows are down here, and we couldn't even get down there. Interesting. So now, before the market even opens, you know where the buyers are. That's why, Howard, you have to use your setup, man. You got to use the look below and fail. And what you need to do is concentrate on just doing the look below and fail, right? Because the market is geared and set up to go long. So shorting is a little harder. Once you learn how to go long, you are going to get very good at spotting competition from other sellers. Once you start spotting where other sellers are coming in, now you are honing your short selling skills. I find the best short sellers I have found in my time are, guys who have been good distributors. They've been selling stock all their life, so they know when there's competition, and that's when you jump in and short, right? You always want to short the back end of a move, not the front end of a move. The back end of the move. Now, what does that mean? In markets, there is a front end of a move for distribution. The back end of the move is when you want to short. You don't want to short this. What you want to do is you want to identify a seller and then short, put your stop above where the seller is, and then put your buy orders down here so when the market goes down, you get filled. Now you use your buy orders to tell you whether or not how your trade is working, right? So you use your buy orders to tell you if your trade is working. So if I'm short at 30 and I put some buy orders at 28 and they get filled, and I put some buy orders at 27 and they get filled, but my ones at 26 don't get filled, then I know that the sellers don't need to sell at 26. They're going to raise price, right? So keep that in your head, Howard, and just keep working on it. You're doing well, right? Just maybe take a little breather on the shorting, right? Do the look below and fail. Do it 1,000 times. You'll be surprised how well you retain this. Just be patient with yourself, right? And of course, if you're wrong, that's why you got to stop. Like say I was short at 25, 26, and then the market offered and it lifted above that 27 and a half. I wouldn't still be in this trade. I'd cut out of it, right? Instead of adding to my short. And I'd wait for another spot to short again. And we're coming into that 1 minute. So remember, you guys ever heard of the gap and trap? Markets love to move price as high as they can before the open, and that brings all the buyers in, right? Sucks in all those buyers. And when the buyers all come in and they're all ready and they got their wallets out, that's when you shank them and take their money, right? See, you could tell that there's going to be selling up here, right? They sold there before, they'll sell there again. Now, if you're a fast trader, what you can do is you can hit the short here at 29, 29 and a half, put your stop up here at 30 and a half, and then put some bids in here at 27 and 26, right? So let's see what they got in the old tickle trunk here on the first of the year, or in the second, or the first trading day of the year. Let's see what happens. So I'm short biased off the open, but I need 23 and a half to break. Right? So we found some bids right at VWAP. Yeah, we're opening pretty quick here. My open sticker. There we go. Open. We found some bids at VWAP again. See? So if you're long off of VWAP, you're looking to get out at 31, 32. Right? If we take those stops, right, they're going to sell into it somewhere here. There's the sell. Right? This is all distribution. Right? This is all distribution. And we will use those trap shorts to distribute as much as we can for as long as we can until the buying runs out, right? The store gets quiet and we run out of buyers, right? Let's see if we can get above 32. Okay, there's a seller at 30. There we go. It's good. It's a little choppy. This is a short covering move right here from 27 to 28. Let's see where they sell into it. We know we've got an aggressive seller between 30 and 31, right? We've got aggressive sellers there. So keep that in mind. And if you're short off of that 30, yeah, Tesla had some pretty bad news, eh? I don't know. I was looking at some Chinese EVs over the weekend, and sorry, I was short 29, and I've got 2 left, and I'm covering down here in the 24s. That's not bad. Right? If that breaks, remember we're looking for 21. See how it took a little while of little razzle dazzle before it actually started to liquidate. Now we're underneath VWAP. Right? So if you're shorting this area, right, boom, we're ripping right through these single prints, taking out the stops. Beautiful, right? I'm short 3 at 22 and 5 and 58, 22.58. Taking them back at 19 and 3/4. Flat. Right? We're just trading off of the inventory correction. This is an inventory correction. It doesn't mean that they're throwing, televisions out the window of the Empire State Building. So there will find the bids. Now, The night market, which we call Globex, you'll hear us say Globex, which means the night market, 6 p.m. to now, right? That market essentially is allows large traders to get rid of what they need to get rid of. Like if you're long from New Year's Eve, right? So if we stay under 19 and a quarter, you can be short. And let's see, put some bids down maybe at 15 and 3/4. Right? We got a seller. It's beautiful. Short 17 and 3/4. Took one back at 16 and a quarter. Took one back at 15 and a quarter. And 16 and a quarter, I'm flat. Right? So I've screwed up these trades tons before I learned how to do this properly. And it took a long time for me to switch from institutional trading where you control the supply to this where you have no control at all except your discipline and your risk management, right? And where you get into trades. Now, we use stuff like the look above and fail or the fail to look above, right? So I'm watching this 69, 19 and a quarter. And there are videos on how I come up with these zones. I do them fresh every day. It's like fresh, it's like a baker. You make your bread fresh every day, right? Now, as the shorts come into cover off those 15 single prints, they're going to sell into them somewhere because now everybody over VWAP is trapped long, right? So if you were long 28, man, goodness, you would not be a happy camper, right? You'd be a seller, right? And that's what the market, I'm going to wait for the next candle and see where these knuckleheads move their offers, right? The candles will tell you more than book map, nose map, footprints, fingerprints, all of that crap. Just all you got to do is learn how to pay attention and zone in, right? So if you're short, even if you're late short 16, right? It's going to bid and it might pop. That's why shorting in the hole is tough. But I'm short 1581 on 3, covering at 14 and a half. And I'm just scalping, right? I'm just scalping to get a sense of the order flow, right? It's my first trading day of the year. Good stuff, Salah. Yeah, and our AI, we're the only trading room that has our own AI that we've developed. And the biggest thing about our AI is not only does it help you, but it gives you information that's not coming from some cat who used to work at Burger King making fries who now says he's a trader, right? So the other thing too, our AI will actually give you trade setup. You type in what you want and it'll help you plan out your trades, which is pretty cool, right? So we found some bids down there at 13. Let's see, this is a big green short covering candle, right? Bigger the candle, the bigger the orders. When the candles are small, slow business. Right? So look at that, absorption here. You got your point of control here. Now we're going to take this cheap crap and we're going to try and sell it. But there's going to be a seller at VWAP. So if you are long 14, 15, 16, right, govern yourselves accordingly. As my client, the Penguin, would always say, govern yourselves accordingly, right? And if you come into our trading room, we'll teach you how to do this. Right? We will teach you how to be a profitable trader. No BS, no shortcuts, no, special software that you need, no proprietary algorithms. By the way, proprietary algorithm means Ponzi scheme, just so you know. If you ever hear somebody say proprietary algorithm, you know that's a Ponzi scheme. All right. So the people who are long 14 to 16, they are going to front run VWAP, which means they're going to be selling 22. And why wouldn't you? If you were long 16, if you didn't sell 22 and you were on my desk, you'd be fired. Right? Take the money. Take the money. Right? Don't get sucked into this. I got to make 30 points a trade. If you can make 450 bucks on a 2-minute trade with a couple of minis, and you can keep it, if you actually have the skill to make your money and keep it, because all of these terms that you guys use, like FOMO and revenge trading, and those are all just excuses for bad business behavior, right? Once you guys learn that, you'll never, as the Who would say, won't get fooled again, right? Get rid of all that stuff. FOMO, YOLO, MOMO, TOMO, all that crap. That's just stupidity, right? And degenerate gamblers, right? Learn the business. We'll teach you the business, right? It's a simple business, right? Buy some cheap crap, sell it at a higher price. When people get tired of paying that higher price, you put it on sale and you get rid of your inventory. That's why they call it a market, not a hot tub, right? Very simple. There we go. Let's see if we can take out 12 and a quarter. They sold into it right where I told you they would. So if you were short selling this, you'd be selling the 22s and your stop would be 24 and you'd be looking for covers here. This is the next area of interest, under 13. Here we go. So good inventory correction, right? Remember, inventory was 100% long. The trade was short. The problem was it took a little while to get down there, right? Those first couple of candles can sometimes be a real pain in the butt. That's okay. See how they're filling in those short bids? Nice work. Well done, Badir. Well done. That's why it pauses there, because the shorts who are trapped there are coming in and doing some buying. See? And as soon as the sellers see buyers, they will lift the offer. Where are they going to lift the offer to? Well, they should sell into it at 16, unless there's a really big buyer or a really big group of buyers. Yeah. You got a nice short off the open. That's beautiful, right? That's trading with the flow of business instead of fighting it all the time. We encourage our members to trade with the flow of business. This way, you actually have a shot of making money and keeping it. Why do you want to fight the market? Right? And the best thing to do when you're short selling is to look for that seller. We found those sellers, we went short. Right? I scalped that move 3 times on the way down. Right? Well, let's see what happens next. So there's still some bids here at 11 and a quarter, 11.50. So when it does this now, right, you see how there's a seller at 16? This is not magic, folks. Where the candle tops are where they're going to sell into it, right? There, and there, right? So if you are short and the market can't get above 16, you can stay short. So say you're short 18, 19, right? This is one of your warning levels, and then this would be your stop. Depending on your account size and that kind of thing, right? So in our room, we will tell you where to take the trade, where to put your stop, and where to exit based on the business at the time. It's going to be practical, and you'll make money. Well, the blue and the red line at that balance edge, right? So at this edge, see, what did I tell you, right? If you were short 18 and it broke 16, I'd start to cover. Now, they're gonna sell into it somewhere. They sold into it here, and they're gonna sell into it now. They're selling into it there. In the next 20 seconds, the next candle is gonna open. Let's see if it can take out that high. If it can't, it will rotate back down. So, Ghosh, what you should do, because I think you should join our room, right? Not to be a salesman, but if you join our room, I can help you with that, right? Because I don't have time to go into it all the time on these videos that I do for free, right? But in our room, we have hundreds of videos. I have 400 videos on YouTube, right, that explain exactly how to do this. We have execution classes. We will help you execute. You've got to learn how to execute. So the good thing is you're here. You get some good advice on how to look at a market. Now you got to learn how to execute, right? Execution is tough, right? It's not easy, right? Execution is not easy. It takes time to develop that skill. So one thing is, if I was looking for a look below and fail, right, which is my signature trade, right, which is this, I could see that there are sellers here and here, so that's not really the trade right now, right? So let's let the large traders work this out. I would more likely go long until we get past VWAP, which is the goalie, right? Good to have you, Dan. Now let's see if we can take out that 69.23 where VWAP is. Hey, Salah. Hey, you're using the great charts. I haven't seen great charts in a while. We've got one of our traders who's actually, well, he's not in the room actively, but he's a friend of the room, and he just sold his prop firm for, I don't know, 1.8 or some crazy thing like that. He always uses gray charts. Haven't seen those in a while. The gray background. So see how there's a seller at VWAP? Right? There's a seller at VWAP. So if you were long 18, 19, you know to get out at 22, 23, right? Because other people are going to come in and compete, right? You are a merchant. You have inventory. You have to adjust the price of your inventory to get the hell out of the trade, right? You got to turn your inventory into cash, right? You got to turn your inventory into cash. Otherwise, it's worthless. And that's why we use stops, because if you have, say you're long at 19 or 20, and somebody comes and offers it lower, right? If you're long 19.20 and somebody comes and offers it for sale at 17.18, well, then you're holding on to inventory that's mispriced, right? So why would you own inventory at 20 trying to sell 28 when someone's selling it at 18? Think about it. Use the old peanut. Now, I know what I talk about is the business, and very few trading rooms, trading educators talk about the business because they never traded size. They never distributed. When you're a distributor, you have to know where your competition is. Otherwise, you're a pretty crappy distributor. Now, let's see if we hold VWAP, right? Remember I said when it punches through VWAP, but you know that there's inventory here, right? There you go. There's that trade I wanted, but I missed it. I wanted to buy maybe 24, but I didn't have my DOM up, so let's see. I'll wait for the next candle, and if the next candle can hold above VWAP, we might take a little scalp long. Here's the backfill. What's this, a big green candle? That's a big short cover, because the people who were shorting here when other people were acquiring inventory, they just realized, oh crap, we're short, and boom, you get that big green candle, right? So what did we get here? I got long at 28. Oh, that was nice. Oh, I wish I had bought more. I was long 28, sold them at 32 half. Nice. Okay. Now do you understand? You let the large traders work this out. Boom. All right. Yeah, the longer you hold a bad position, the worse it gets. For some people, they might luck out. I never luck out, right? If I make a bad business decision, I pay for it immediately. That's why I like to admit I'm wrong quick. Just rip off the Band-Aid, admit you're wrong quick, save your money, wait for the next trade. So it is, remember folks, it is a brand new year. So that means all these traders, it's like daddy paid off the credit card, so they all have fresh credit, right? It's a new year. Good stuff, Howard. Trade smart, brother. Perfect, perfect. There you go. There you go. Right? Protect that money, right? And once you make some money in trading, you wrap your arms around it and protect it. Okay? All right, what's next? Another 10 minutes here till the next period opens. That's why I've got the countdown here. The countdown tells me how much time I have, for the next candle or for the next half-hour period. Helps me manage my expectations, manage my risk, right? Situational awareness is really, really one of the hardest things to learn in trading. And we'll teach you. We'll teach you. Taking out that overnight high is going to run some stops. Remember, people, they sold it down. A lot of people are short under VWAP. That's why we're getting this big push up, right? Big push up. Because the shorts who are trapped under 24 realize, yeah, there you go. Now you got it, Howard. There you go. Right? Now you got it. They're going to sell into that overnight high, right? Because when you run the stops, that's why a lot of breakout trades don't work, because people will be buying that breakout of the overnight high, and then all of a sudden they get smashed right down. I would look for bids here at 34, just based on the positions underneath 34. You can see the volume here is thick, the volume here is light. That's where they did the stop run, right? That's where they blew out those stops, right? There, and there, right? So now they're backfilling. See if we bid here at 34. See, there's a little responsive buying. I wouldn't buy that. But if I was short from 38, 37, I'd have some bids down here at 34, and then I'd put bids underneath 34. And if those bids don't get filled, then you cover your short, right? That's why I don't like buying breakouts. Buying breakouts is a sucker's bet, right? Because generally, in a choppy market, the size sellers will use that breakout to whammo, sell into it. Because the breakout creates buying. So if you're a size trader and the market breaks to the upside, it's beautiful. It's like a gift. You get all these extra buyers. Shorts covering, FOMO longs, breakout traders. And that's where you sell into them, right? Dumb money, smart money. Dumb money, smart money. Always remember that, right? You don't want to be the dumb money in the market. Come to our room at the Trading Syndicate. We will teach you how to be smart money, right? And we're not going to charge you an arm and a leg, right? So spend the 20 bucks, learn how to trade, and then maybe you won't lose thousands when you're actually trading, right? A little education goes a long way, right? Okay. Little backfill action here. Still have almost 6 minutes before the next half-hour bar opens. Do you see this pattern and this pattern are the same? This is a balance where you acquire inventory. This is a balance where you distribute inventory. So if you guys want to like visualize this, this is where you load the trucks with your inventory, drive them to the store, and this is where you're selling them. Now, if we run out of buyers, we'll bring the price back down to where we bought it. Keep it simple. Keep it simple. The more you can simplify your approach to analysis, the better your execution is going to be. And then you're going to have to learn how to manage your execution, right? So this is distribution. I don't like trading distribution. Nice work. Thanks, brother. Time for you to go do some cooking. Have a good weekend, okay? We'll check in on Monday. This is distribution. Distribution. Sorry. Remember, folks, this whole thing, everything that we're looking at, whether you're looking at a daily chart or a weekly chart, these are sales charts. They tell you where they paid for it, profit zone times 2 times 4. It's simple, right? It's simple. You can see silver. The silver cost basis is down here. Look, you draw a volume profile. You can see the big chunk of volume there, right? That's where everyone's positioned. That's where the smart money is positioned. This is where the smart money is positioned, right? They're positioned here, and they're selling it to you guys all the way up. And the more people who short it, the higher the market goes. Where it stops, well, I don't know. We've done a look above and fail of 79. Let's see if they correct inventory back down. Right? So in our trading room also, we don't just teach you futures. We'll teach you equities, whatever you want to trade. Right? I think for new traders, the best thing to do is to trade the ES because you can use the micro and you can learn how to trade without hurting yourself. Use those funded accounts, learn how to pass an evaluation, learn how to actually get a payout, and then once you start developing skill, right? Remember, the problem with a lot of traders is that their ego does not match their skill. Now, that's a rough thing to say, but it's true, right? That's why you can see on my Twitter profile, it says we're all just one trade away from humility, right? Yes, I would say ES is a lot easier than penny stocks. And here's something, Ty. You don't ever want to, like, trading penny stocks is, I mean, listen, if I have 100 million shares of a penny stock, please come and trade my penny stock because I can sell you all my inventory, right? Right? I want as many suckers to come in. See, the guys who actually run the penny stock markets, like me, we don't pay for our stock. Or we pay, if you're buying a penny stock at 50 cents, we paid 0.0001 cent for it. So it's kind of hard to compete with us. Know what I mean? If you learn how to trade ES, you can grow with it too. So you can start trading ES on a small account, learn how to trade, and then size up, right? You can grow with the ES, and it's also a regulated, stable market. Penny stocks, guys back away from bids, right? And there's always somebody like me just waiting for you to take your money, right? You can make decent money with micros, and it's scalable so that the ES market will grow with you. Also, it's a nice thick market. The other nice thing about ES is you don't have some schmuck like me dumping 100 million shares of stock when you're trying to buy it, right? And never invest in penny stocks. Because why would you buy a stock when you can get it for free? Right? I can go to 5,000 companies right now and ask them, tell them I'm a consultant, I'll bring some buying in, they'll issue me 1 million shares for nothing. So there's dilution. There's no dilution. There's no dilution in ES, which means you don't have somebody who has stock at this price, right? You don't have somebody who has stock at this price selling into this price, you see? Everyone has a real cost basis in ES. There's no free ES contracts. But in penny stocks, there sure as hell is free stock. I know because I lived on it for 30 years. I have never paid for stock in my life. It's always been given to me. I'm a mechanic. All right, so we found bids. Now, price stability brings buyers, and if enough people shorted here, just like here, we'll get a push above and we'll take out that A high. Let's see what happens. Hey, anybody got a quote on what's his pickles deal? Oh, he actually got it up to 151, 154. New Year's buying, eh? Gotta love it. Tesla's up 4. Crab Apple's up 5. Another false breakout, maybe. Let's see where they find the bid. I'm fascinated by MSTR. I've got to say, I have an unhealthy fixation with that stock. I don't own it. I'm not short it, but either this guy is a mastermind or he's perpetrating one of the biggest whammies out there. We'll see. Time will tell. Right? I hope for the people who are long that it works out. That it turns into a palantir. I hate seeing people lose money unnecessarily. Some decent back and forth trading. It's the first trading day of the year, so it might not be the greatest. That's okay. Let's see. You know, Nobody will be back to work really until next week. If you guys weren't here, usually I take the 2 weeks between Christmas and New Year's and I'm gone. And I don't do any streams. This is the first year in 3 years we stayed in town, which was kind of cool. Liverpool's wonderful at Christmas. Got sellers at 39.40. That's okay. Let them sell. Now you noticed I haven't taken a trade in the last little while because I don't see a setup just yet, right? I'd love a look above and fail of 47 where the market goes and pokes its head above 47 and then the sellers come in like whack-a-mole and whack it. 47 down to 40. Right now, we've got bids at 30, right? Remember where there were sellers before at 30. So we know the position is underneath us. The short-term position is all here. Check it out. It's all under 30, right? And we are in distribution above 30. So until we run out of buyers, we're not going to get this yet. Here we go. Here's something cool about market profile. Not really tradable, but you see where the cost basis of the inventory is? You see where the B low is? It opened and it didn't get down there straight up. That means that there are shorts that are trapped here. Remember we had a 30 bid? That bid moved up from 30 to 32 over the last half hour. You got to know where the bid is. Right? If you don't know where the bid is, how can you do business effectively? It's very hard. Watch. Let's take that B low and push it down to 30 now. Come on. See the responsive buying when we came down to that level? Yeah, price action's not bad. I think it's going to be a very good year. Yeah, I think you're right, Raj. Hmm. See? Bids. So I won't trade this. When it's choppy like this, just leave it alone. It'll save you a lot of heartbreak. You wait for your setup, right? Once you see a clear setup, then you execute. You got to remember, as a retail trader, you're not going to be trading 99% of the time. You're going to be spending 99% of the time watching, waiting for your setup, like you're stalking it. Here we go, right? We're now putting it on sale. Now, if you were quick and you were shorting that 35, now I'm seeing that after the fact, so I didn't call that out. Full disclosure, my concentration's lacking now. So I saw that. Smarter trader would have been short 35, 36, 38 stop, looking to cover under 30. I missed that full. Can't lie. Massive pullback? You love exaggerating, don't you, AO? You have a penchant for exaggeration. But that's cool, brother. That's cool. That makes you a colorful character. All right. Now, we should have sellers at 29, 30. See, because we trapped all these folks above it. So you'll look for a break. If we can't get back up over, say, 32, you'll look for a break lower to take out VWAP. Right? I'm thinking rotations for the day too, right? Just rope a dope until everybody comes back on the desks. Right? It's a new year, so all these fund managers will sit down with their pods and start putting things together. I do. If you're a new trader, I sincerely recommend that you use funded accounts because you're going to screw up. I screwed up. Everyone screws up when they start retail trading. So why don't screw up and pay 30 bucks a month or 40 bucks a month and learn the craft, right? Now, sellers at 30. So we're looking, let's see if we can get down to VWAP's 26 and a little bit of change. I definitely use funded accounts, use other people's money, right? Then you'll get a feel for the market. Once you start pulling money out of those funded accounts, then you can trade your own money. But the funded accounts will teach you discipline, right? And they'll teach you there are rules to the business, right? Because unfortunately, when you're a retail trader, and that's why we have the room, so you don't have to trade alone, right? When you work at a brokerage firm, and excuse my language, you got at least 4 people up your ass every day. You got the owner of the firm, you got the credit manager, you got the compliance guy, you got the head trader, and whoever's in charge of your group. They're always like, hey, what are you doing? You're offside here. What's going on here? What's going on there? You don't have that in retail trading. So you have to develop that framework of compliance for yourself so you know when to do business, when not to do business. Very important. I can't, so I think a funded account will teach you how to become profitable. Take it slow. Don't put crazy amounts of pressure on yourself. So we had a good question from one of our guys. Why would you say it's rotational? Because it's an inside day, right? Very simple, right? You're inside the previous day's range. Where's the breakout? You see that, Ali? Right? Why would you be looking for a break of this and a break of this if we're just going back and forth here? See how simple it is? The hypothesis, you don't have to, you don't have to write a doctoral thesis to know that it's an inside day. Simple, 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 simple. It's a simple business. Save all your brain power for execution. You're going to need it, right? Right? If you have a gap up or a gap down, that's different, right? If you open on a big gap up or a big gap down outside of the previous day's range. We're just rotating inventory. Just think of it like a big used car lot. Very simple, 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 simple. Now we're on sale, right? A little bit of a sale. The blue light special at Kmart, right? This inventory here, We're coming right back, and now if we really need to get rid of it, we're going to break the 12s and come into this area here in the 10s. Okay? How you doing, Ollie? Good to see you. Yeah, use the funded accounts. Be patient with yourself. Put in the time. Learn one good trade. You know, as the guy from, was it Mike Bellafiore says, one good trade, right? That's all you need. You need just one good trade. Once you get that one good trade, you can scale it. Alrighty. Now, see how we filled those single prints? Finally, we filled those bids. Now we're looking for acceptance under 12 and a quarter. So now this is short covering, right? Because the shorts are trapped here. So as the shorts start to cover, look where they sell into the cover, right? So where they sell into the cover, that's where, so if you're shorting this area, say you're short late. Well, if you're short late, then your stop is going to be here or here, right? And if you're short late, right, you know that there are bids here. How strong they will be? Let's see. Yes, the buying, just like Renee, when you're in a store and they can't sell at the prices, they just it's a markdown, right? So what happens is the people that you trapped long here, they start to sell first. When they start to sell, the wholesalers take out their knees and sell underneath because their cost basis is down here. So they'll sell it down. So then you've got everybody competing to get out. The short sellers are your canary in the coal mine. Their bids get hit. As soon as you're short and your bids get hit, you pull those bids down, right? Because if you were short 5,000 contracts, I'm short, where am I short? I'm short 1092 on 3, covering 9.5, 9 3/4. It's not bad. If you are a big short seller and say you're short 5,000 contracts here, you put up a bid here for like 500 or a couple of hundred and they get filled really quick, then you know to drop your buy orders. Now with electronic execution, those buy orders get dropped in microseconds. So as soon as the shorts see size on the bid coming at them, they'll drop their buy orders and then the market will rotate lower. Yeah, that's why the old guys say short selling weakens a market. That's why. Because once the shorts are done covering, there's no reason to hold the thing up anymore. Right? And the wholesalers, remember, their cost basis from New Year's Eve is underneath 68.97. So we could actually come down and check out the New Year's Eve low. That would not be unheard of. Now everybody would say, JJ, why don't you just short it here and hold it all the way down? Well, first of all, remember I missed that one, right? And once you're short underneath VWAP, that's okay if you have a larger account and you're totally tuned in, right? But what I'd like to do is I'd like to cut this up into maybe 1 or 2 trades and take that in a couple of trades instead of one big one. Because that way I can manage my risk a little bit. Because this market has an annoying habit. Just when everybody gets short, all of a sudden it magically runs out of supply and rips up. There's 69.05 and a quarter. There's one single print left here. No, there we go. The old overnight point of control was down here at 69.02. Then it moved all the way up here for distribution. I just left that just out of curiosity to see whether or not. So we stopped right at that V low. See how we stopped right at the cost basis of the initial overnight trade? Well, that's beautiful. That's a proper inventory correction, right? We had selling on New Year's Eve. We took that. We sold it higher at night during the night market. You can think of the night market, Globex markets, as, say we had a bunch of bread. Nobody wanted to buy it. You take it and you sell it at night to the drunk people. And then when you're done, the market comes back to your cost basis. Now, the big question for 26 is, does the market take out this previous day low and then come down at 84 quarter, 74 quarter, and 64 quarter? So we'll see, right? If we break New Year's Eve low, then we'll get some further liquidation. But right now I can't tell because we're stuck at that 69.0. I got 3/4, and where'd we stop? We stopped at 4.5. A little bit of responsive buying here, but let's see what happens. Remember, first trading day of the year, you don't have to commit all your capital. See how we stopped right at that stop to the tick. And you don't need market profile. You can use a half-hour candle chart and just mark out where your stops are. And there'll be some short covering here. You'll see some size come in. And if those shorts see a seller, boom. I don't know if he still has that going, Dano. Let me check. I raised it by $10. I don't set the pricing. He's the market maker on the room. Yeah, right. What did I tell you guys 5 minutes ago? Look for that overnight low to get tested. Remember, because we had that gap from the close on New Year's Eve to the overnight low. So now let's see. What do they got in the tickle trunk here? What do they got for bids? Right? See how there's responsive buying right before the overnight low and that stop at 98? Sorry, the stop's in the wrong place. It's one tick lower there. Right? So there's responsive buying here. I think this will break. And I think we'll come down because I still think that there are people who didn't cover on New Year's Eve. And I think they're going to use this to do some covering here. Let's see. There we go. Took out the overnight low. There's that 68.95 gap fill right down to the close. That's a perfect inventory correction. Right? So remember what we said off the open. If we're off the open, we were short biased. And now the previous day low. Right? So now old business has been taken care of. We took that old crap that we had from New Year's Eve. We got rid of it last night, sold it right back down. Now, if we break 68.90, we're going to go into price exploration, right? So if you're short and we take out 68.90, your stop will be 68.90, and you'll put your bids down here. We can use these levels and we can map them out. So we're in the red discount zone. And if we break 84.25, then you go into the 4 times discount zone of your inventory. Very simple. All right, so we broke the previous day low. Remember, I told you guys that was most likely going to happen. And we did a look below and fail. Let's see where they sell into it. Now is where it gets really interesting. Remember, it's a brand new year, and the shorts who had to cover have already covered. So there's a new time frame of shorts, and they might let this thing ride a little bit. Don't be long if we accept under the overnight low. Okay? Let the market go and find the bid. When the market finds the bid, then wait for the look below and fail. Right? Let the large traders work this out. Yes, the room has additional stuff. I also do specialized sessions, right? We have execution labs usually every Wednesday where that's not on YouTube. And then you have access to me. So there's the room and then there's the one-on-one mentoring if you wish to go for that, where I work with you every day. There you go. Is there an untraded pocket 87? There we go. Nice call, Moran. Yeah, why would you look for a bottom or a top? That's not your job. Let the billionaires find the bottom and the top. Why do you need to do all the hard work? Right? You know, pretend that you go into lunch with your buddy. He just made $100 million. When the check comes, you don't go reach for your wallet. That's when you get alligator arms. Right? Let them pick up the tab. You don't need to find the bottom or the top of the market. Right? This might be a look below and fail. And if we have a look below and fail, let's see if we can hold that 90 low. Right? So if you're going long on this look below and fail, say you're long 91, 92, right? That's some responsive buying that's coming in, right? Your stop's going to be 90, right? Well, you know there's a seller. There's going to be sellers because everyone's inventory is jammed up on the way down. So if you are long, don't be greedy. Sell into strength, right? Even if it's a couple of ticks, right? So I'm long 92, and I'll take the 94s. Thank you very much. Thank you, thank you, thank you. Right? And I'm flat. No, you don't use a volume chart. You don't need a volume chart. Ty, are you trading 100, 200, 300 ES contracts? Are you trading 5,000, 1,000? You don't need a volume chart. All you need to do is watch the offer. Come into our room. I'll teach you how to do this simple. The less stuff you have on your screen, you should actually, when I trade, basically all I'm doing is I'm just watching this. Watch the offer. When the offer starts to lift, you can go long, right? Remember, this is a chart of the city. So we know at the edge of the city, we went to a bad neighborhood and popped up. But if the selling continues, we'll stay underneath 90 and come down. You don't need to look at volume. The other thing is people who teach volume analysis, I mean, there's some really nice people out there who teach volume analysis, but they've never traded volume. So how would they know what the hell they're talking about? If you've never traded 5 million shares of a stock during a day, how can you tell people that you're teaching them volume analysis when you're trading 100 shares? It just doesn't make any sense, right? Because they come up with all these cockamamie theories that don't make any sense, right? That was a nice look above and fail of the overnight high. $84.75, the RTH halfback of December for the whole month. Ah, nice, Jeff. Thank you. Beautiful. Well, that's pretty much it, folks. On this first trading day of the year, have a wonderful trading day. We will see you on Monday. Over the weekend, I'm going to do my year-end update. So I'll have levels for ES, crypto, equities, silver. You guys interested in doing gold? Anybody else? I've got gold charts, so I'll include them, right? Just silver's the hot thing now, everybody, right? It's all the cool kids are trading silver, so, you know. Hey, Seymour, mahalo. Good to see you. Right? See, this is a nice look below and fail of the previous day low, right? So as we expected, the short sellers came in for some size, right? And if we stay above the previous day low, we'll rotate all the way back up. Thanks, everyone. We'll see you on Monday. Have a wonderful weekend. Come visit us at thetradingsyndicate.org. And as always, don't take candy from strange market makers. Have a great weekend. Bye for now.